This and more, streaming on the world's first news OTT, News 9 Plus. Download now.
Hello and welcome. You're watching Business Plus. I'm Shweta Kothari. We're bringing you stories from the world of business policy and economy. First up, let's take a look at headlines. Finance Minister Nirmala Sitharaman endorses RBI's cautionary approach to retail loans, says central bank is conscious of the thin line. Reserve Bank of India recently clamped down on unsecured personal loans. Deepfakes as a new threat to democracy is in fact a new threat to democracy, says IT Minister Ashwini Vaishnaw, promises that the government will come up with new regulations to tackle deepfakes soon. The National Company Law Tribunal extended the insolvency process of grounded airline Go First by 90 days. As revival hopes sink, Go First may face liquidation. Elon Musk's Tesla planned to invest up to $2 billion in India in a plant, but has tough demands. Tesla will only set up a factory in India if the government approves a concessional duty of 15% on imported vehicles. And Taj Hotels suffer a data breach. Personal information of 1.5 million customers exposed. Tata-owned hotel group says it is investigating the matter. All those stories right here on News 9 with me is Karthik Malhotra as usual. Karthik, hello.
Hi, Shweta.
Let's begin with our top story, and that is Finance Minister Nirmala Sitharaman has now come on record to endorse RBI's tough measures on unsecured personal loans, saying that RBI is conscious of whether that thin line is between lending and enthusiastically lending versus growing NPAs or resulting in growth of NPAs as personal loans and people who are asking for more personal loans continue to spur.
So, Nirmala Sitharaman's message to NBFCs as well as small finance banks is very clear, and she's saying, and I quote, don't go too far too soon. And that is exactly what she's saying, and she's echoing pretty much what RBI Governor Shaktikanta Das had said and had actually gone ahead and implemented by assigning higher rates to unsecured loans. What are these unsecured loans? These unsecured loans are both personal loans as well as, let's say, enhancements in credit limits on credit cards, etc., which are not backed by any sort of mortgage. Now, what happens in the case of a home loan is that the bank has got, let's say, that entire real estate piece as mortgage. In the case of a car loan, the bank has got that piece of asset which it can then take back from you and recover what it has lent to a consumer. In the case of personal loans, in the case of credit cards, there is no mortgage. Now, this is a segment that has actually been ballooning for the last 1.5 years or so. And over the last 18 months, RBI has been fairly consistent in its warning, in its sort of direction to banks, NBFCs, small finance banks, fintechs, that go slow, take it easy, because you don't have any collateral against what you are lending out. Now, in the absence of that, the possibility of bad debts mounting back on your books becomes a high probability. Now, what RBI has done by increasing the risk weights is that it's asking banks to keep aside an additional 25% of the already 9% that it would assign to any unsecured loan. So this takes the possibility of banks having to keep, instead of 9%, up to about 11.5, 11.6% as capital allocation towards these unsecured loans. Now, Nirmala Sitharaman came on record yesterday and said very clearly that, you know, as banks, as NBFCs, as lending institutions, be cautious, be wary of what you are lending, how much you are lending, who you are lending to. And perhaps unsecured loans is not the best arena for these financial corporations and institutions to really, park their money in. In lieu of that, what she's suggesting, and this is again a quote that has come from Nirmala Sitharaman again yesterday, she's saying that as banks or as lending corporations get deposits, take money in, and when you get these deposits, give these deposits a good interest rate. Now, when you give these deposits a good interest rate, in the process, you end up making money as well. And how do you do that? She's saying lend to those who want to use the capital from you to create jobs, to put up units, to put up factories. and participate in a larger nation building sort of a role. So give money perhaps to those organizations, those individuals who have entrepreneurial MSMEs, entrepreneurs, and those who are going to exactly. So those institutions, those individuals, those companies which are likely to use that money better and drive that sort of growth within the GDP by way of capital investment, by way of employing more people, etc. Now, there's a little bit of a dichotomy here as I see it, because the bad loans at banks, the NPAs at banks have thus far, and they've reduced significantly over the last few years, ever since we started tightening regulations and reforming the financial institutions. I think the challenge really was that you were lending large sums of money to corporations and to businesses, and those were the businesses that were actually tanking those loans, and as a result of which the NPAs in banks were ballooning. So banks and NBFCs had found the sweet spot in unsecured personal loans, and consumption by its nature in the last few years has been one of the biggest drivers of India's growth. Now, at some level,
look at credit card spends.
Look at credit card spends. Look at large purchases being converted into EMIs and people going ahead and acquiring more and more assets to bring back into their homes. The consumption story is worth about 55% of India's GDP. And I think that could perhaps potentially now take some sort of a beating with RBI tightening norms, Finance Ministry also telling NBFCs, small financial banks, to be cautious in their exuberance of lending to this largely ballooning sort of a sector. And thereby perhaps loans could become more expensive, and if loans become more expensive, this consumption story may take a bit of a beating.
All right, and there is no consensus on the consumption story. Different analysts, different experts are saying different things. They're saying maybe consumption will continue at the same pace. Others are hoping and predicting that people will buy less now, purchase less, now that they'll have to pay higher interest. Some are also of the view that because lending will become more difficult, there'll be more thorough, rigorous checks, not everybody will get that loan that they apply for.
So, I think at one level, NBFCs and the small finance companies, fintechs, etc., will be required to be more wary of who they are lending to.
So your Paytm, Bajaj Finance, all of these
Jio Financial Services as well, which is entering the fray now. So I think they will now need to be a little more KYC compliant, stricter, knowing your customer very well, who are you lending out to, and of course the interest rates, the higher capital allocation could have an impact on the interest rate on which you lend to customers. If that goes up, then those who are borderline cases sitting on the fence looking at taking entry-level loans may get dropped out. But then at the same time, you also have India's middle class, which is also growing year on year and is likely to be 60% of the country's total population. From 30% right now, is likely to be 60% by 2047. So it's in any case a large middle class. The consumption story, speak to any economist, I think everybody is bullish on India's consumption story. But this consumption story could take a little bit of beating, if the easy access to capital, easy access to loans to purchase capital goods, assets is reduced.
All right. So far, no change in interest rates, not that we know of.
No changes yet. No
changes yet, not that we know of. Will happen perhaps gradually, but there is a consensus that says that the consumption story that India is riding on, the growth in consumption, could take a beating in days and months to come. But shifting focus to a story that has emerged as one of the biggest movers in the last couple of months, deepfakes. What can deepfakes do? To what extent can they harm democracies, topple democracies perhaps in certain cases? That is the concern, and the government is also acknowledging it as a big concern, also hoping that AI regulations around deepfakes will be out very soon.
Now the question is this going to be an amendment to the existing IT Act, or is this going to be in the ambit of the Digital India Act, or is there going to be a new AI regulation altogether? And that is something that we don't know as yet, Shweta. But I think it's fairly clear, and ever since this issue of deepfakes began, we started with Rashmika Mandanna, we saw Katrina Kaif, we've also seen viral pictures, videos of Kajol, and even
Sarah Tendulkar,
Modi.
exactly. Yes.
So I think overall, we from day one, Shweta, on this show have been saying that deepfakes is not restricted only to celebrities and influencers, and it's not just all fun and games, morphing images and putting them on social media and letting them go viral. We've been saying from day one that deepfakes could potentially be a threat to democracy, and I think the seeds of this were sown, and the efficacy of misuse of deepfakes was fairly clear in the last US presidential elections as well, where we saw deepfake voices and deepfake videos emerge on social media, and they could pretty much change the narrative. Deepfakes have the power and the potential to say things that were never said, create images that were never taken, get people to gesticulate in a manner they never did, and these could have far-flung implications on elections. Now, I think cognizant of that, the government has now seemingly gone on an overdrive. Prime Minister Modi himself has spoken at a G20 meeting asking for AI regulations and some sort of a consensus around the world on how AI needs to be regulated, how this large wild animal needs to be tamed. Of course, there are advantages, and I think India has tried to maintain that fine balance between regulation and innovation, not letting either of them thwart the other. But I think at some point, as we get closer to elections, it is a clear and present danger, and the dangers of deep fake, and Ashwini Vaishnaw, as much as saying that deep fakes are a new threat to democracy, is something that assures that there are going to be some serious measures taken to curtail deep fakes right at the source. Now, what do we know so far? I think Meti and Rajiv Chandrasekhar, MOS for IT, had come out with a statement sometime back, when this whole celebrity-linked deepfake controversy was rife, that 36 hours is the window available to social media platforms to take down deepfake content from their platforms. And advertisers, and this is something that Meta has said, that advertisers who are using deepfake or AI generated content as advertising need to have disclaimers. But Rajiv Chandrasekhar said that's not enough. You've got to do more. But I believe that even the 36-hour window is too long a window for content to go viral. I mean, it takes seconds, minutes for content to spread, proliferate, and get accepted, get viewed, get shared. And 36 hours is too long a window.
In fact, the government in its advisory to various social media platforms actually narrowed that window to 24 hours. Although the law of the land says 36 hours is all you have, but make sure it goes down in 24 hours. But even that 24 hours is not enough. And I want to take our viewers back to a conversation we had with Kanish Gaur, and it was and I think it's out there on our social media for you to watch if you want to know more about deepfakes. But I think something very important that he flagged, and that is, even though government has come out with diktats, nothing has been done by social media companies so far. So that filter, that can be installed at their end to differentiate between what is original, what is deepfake, that hasn't been put into place. There's no system of identifying. There's no filter that is out there just as yet.
So I believe, Shweta, and this is something that, in our conversation with Kanish Gaur, a cybersecurity expert at Voice back then also, I believe the solution to the problem is in the source of the problem itself. If there are engines that generate deepfake content, there are certain codecs that get used, and there are footprints of those codecs in any content that gets generated using deepfake and AI-driven technologies. Then you just need mechanisms to be able to identify those codecs on the source itself. And it doesn't really need people to complain and FIRs to be filed and a lot of remarks and comments on social media that, hey, this is fake, this is fake, this is fake, take it down. I think the solution lies pretty much in the source itself. Using technology, and the same deepfake technology, you can detect at the source itself whether a video has been digitally altered or not. And if it has been digitally altered, don't take it down, at least restrict its circulation. And if the circulation is restricted, obviously its virality and it reaching more and more people who are likely to believe that piece of content will go down. But then again, I think social media firms, user-generated content platforms like Meta's Facebook or Instagram or YouTube or even Twitter, X for that matter, have not yet implemented it, because I think they're also waiting for how long can they get away without really having to make those investments and get those teams together and create this whole fact-checking sort of a technology-linked and manual intervention-linked mechanism. But I think India is too large a market for them to ignore. And all these companies are thriving on India's large user base. So if the government of India comes out with an act, comes out with a law that requires them to take that content down within a much shorter time window or detect that content at source and not let it proliferate, I think India is too large a market for them to ignore.
All right, and perhaps that is the need of the hour. The need of the hour is for these companies who host such content to also come up with some sort of either manual or technology supported mechanism in order to identify a deep fake or not. But what are deep fakes? Why are they concerned? As Karthik rightly pointed out, deep fakes very, very similar to what could be an original video, a picture. It assimilates an originality that cannot be distinguished with naked eyes, therefore making it harder to identify and harder to tackle. But moving on to a story of an Indian airline that seems to not come back despite promises made, despite a lot of hopes, a lot of conversations between the resolution professional. Go First, the airline that went under in may not come back. Although NCLT has given additional 90 days to the resolution professional to come out with some sort of solution that augurs well for the committee of creditors as well as for the airline.
So I think Mr. Ajmera, the resolution professional, has a very, very tough call to take and a very, very tough task ahead of him. And these 90 days now are perhaps the make or break for the airline. Is it going to stay grounded forever? Is it going to eventually get liquidated? Or will they find a suitor? Will they find a bidder who wants to take part in this fairly large, fairly lucrative, yet ailing very few survivors sort of a sector?
Lucrative, so, is it?
Lucrative for those who manage to stay in business. I mean, look at Indigo and look at Indigo's profitability, look at Indigo's market share only growing. So if you get the business right, then sky is the limit literally, but very few get it right.
But with where Go First is at the moment, is it a lucrative business?
Well, not at present, obviously, because it is sick. It is on ventilator, and I think it's just a question of whether some sort of a magic drug is going to pop it back to life, or you pull the plug and let the airline pretty much
because
die.
Clearly Jindal Power, which had made an expression of interest, has backed out.
Yes. So what really happened was, I think the expression of interest from Jindal Power was the only one accepted by the resolution professional, and that was the only qualified bidder, so to speak. But on the deadline of the bidding, date of 21st of November, Jindal Power backed out. And because it backed out, there wasn't any other bidder in the fray who had qualified on the basis of the EOI. So now there is no other bidder. So now there was meant to be a meeting yesterday of the Committee of Creditors, and the COC met now. At some point in the past 2 months, 3 months ago, the COC and the leading lenders, including Bank of Baroda, IDFC Bank, Deutsche Bank, etc., were looking at infusing another 450 to 500 crore rupees in the airline, hoping for a resolution to work in favor of them, to work in favor of the airline, taking to the skies again. But then they also, developed cold feet and chickened out of making fresh investments because they weren't very clear of the future of the airline themselves. Now, as the deadline has lapsed, there was no other bidder on the 21st of November. And then the resolution professional went back to NCLT and asked for an extension. And that extension has come by way of 90 days. 4th of February is by when some sort of a resolution plan, some sort of a solution to this large looming challenge of Go First taking off or not taking off needs to be drawn. And I think 4th February now is when we'll get to know, and during that period we'll get to know, is there going to be a new opening of EOIs? Will there be new parties invited to express their interest in buying the airline? Is there going to be a new deadline to the bidding process? Or eventually, I think the COC and the RP sit together and decide that there's no point burning any more money and energy into this airline, and let it just die a natural death and liquidate it.
Absolutely. So 3 months, after which Mr. Ajmera will have to finally concede that there is no turnaround for Go First.
Or come out with a plan of a turnaround by way of a fresh bidder.
All right. But I think we can now confirm to our viewers at this point in time that it looks very unlikely for Go First to go back to skies anytime soon.
I mean, I believe if a 90-day window has been sought, then we should give the RP, we should give the resolution professional and everybody working on the team those 90 days to try and find a solution. So let's not complete completely write it off yet. Yeah, it's a high probability that the airline will be written off, will be liquidated, but I would still call it in the realm of possibility, a high probability, not a surety.
All right, so in the next 90 days, more capital infusion is what RP will be looking at.
I think fresh capital infusion through way of lenders, the committee of creditors may not happen, but some sort of an opening up of new expressions of interest and hoping for another bidder to come in the fray could be one of the possibilities. And of course, the higher probability right now seems liquidation.
All right, liquidation for Gophers seems like not an absolute, but a higher probability at this point in time. I think everything will be made clear at the end of the 90-day extension that Go First has been given by a company's tribunal, after which liquidation could be an eventuality. But moving on to a story of India's dream, in fact, India's dream to get an electric vehicle specifically from Tesla. Tesla is negotiating, bargaining very hard with the government on what it wants, how much it will invest. But it is maintaining that we need 15% concessional duty on import of EVs. You give it for 1 year, we'll invest about $500 million. You give it for 2 years, we'll invest $2 billion.
Yeah, so I don't think it's actually linked to 1 year or 2 years specifically. Yes, we know for a fact that Tesla is pushing government of India to lower import duty of fully built electric vehicles to 15%. Now, what is the duty structure right now? On cars which are imported into India, fully built units, these are called CBUs, completely built units, those cars coming into India, no matter whether you're electric or a traditional conventional ICE engine, petrol, diesel, whatever, if you're a fully built car priced at $40,000 or above, then there's a 100% import duty, which means it's going to cost $80,000 in India at whatever conversion rate. And if the car at source is priced below $40,000, then the import duty is 70%. Now, the government of India is exploring reducing the import duty on electric vehicles as a whole to 15%. With a commitment of those electric vehicle manufacturers to start making in India. Now, fairly clearly, obviously, it seems that this is a move in some sense to favor Tesla's entry into India. And government of India is making it a fairly lucrative deal for Tesla to drive its cars into India. Now, what is the government asking in return? The government is asking that if we were to lower this import duty to 15%, you've got to make a commitment that 2 years hence, you will start manufacturing in India and tell us what are your ambitions for India. And it was reported earlier that we are looking at about $1 billion worth of investment from Tesla. Now, Tesla is saying that, and this according to an ET report suggesting that Tesla is open to going up to $2 billion of investment in India. But there are some terms and conditions here. Now, what are the terms and conditions? And this again is as per the Economic Times report. Terms and conditions are, Tesla is saying that if you permit me to bring in 12,000 electric vehicles fully built, then I am open to investing up to $500 million. If you were to relax that ceiling and let me import up to 30,000 vehicles with this reduced 15% import duty, then I'm willing to invest up to $2 billion. So that's the range that Tesla wants to play with and perhaps squeeze out a better deal from government of India. Now, what is the government of India saying? Government of India is keeping a target of, let's say, 10% of all projected EV four-wheeler consumer vehicle sales in India may be imported vehicles. And that 10%, depending on whatever hypothesis they are drawing and looking at the graphs, and it's interesting data again, because in Jan 2022, India had just about 1,500 to 1,800 electric vehicles registered in a month. Till September 2023, that number went up to almost 5,000 electric vehicles registered in India. So overall, that graph has been going up. There is a greater demand for electric mobility in India. Now, Tesla is trying to squeeze out a better deal from government of India. Government is saying that, okay, really clear that we are going to see a 15% or nearabouts import duty for electric vehicles.
All right. So for a layperson who is only interested in knowing whether they'll be able to drive a Tesla car, is that reality coming to fruition anytime soon?
So, I mean, again, reports indicate that as early as Jan 2024, we could see some sort of a clear plan on Tesla coming into India. Now, Tesla's cars also, especially the Tesla Model 3, which is one of the leading cars that it sells in the US, is one of the cars which is likely to come into India. And at about 40 lakh rupees or so, and that's the sort of price comparison we had done with a 15% import duty and some handling, shipping charges, etc. So Tesla is in a good position to sell an electric vehicle, a sedan, with a Tesla logo slapped on it for, a sweet spot of about 40 lakh rupees. And that puts it beautifully in the range of electric cars that we have in India, because that is pretty much a vacant slot. The one between 35 lakhs to about 45 lakh rupees doesn't see too much traction yet. And BYD, which is also facing troubles of its own, is the only operator that the only car seller that operates in that zone. So 40 lakh rupees for a Tesla car seems like a sweet spot. And I think the 12,000 cars that it imports at $500 million of investment is something that is likely to sell as hotcakes. 30,000 also doesn't seem like too big a number for them to be sold in India.
But is there enough capacity, depending on how many cars have been registered, and you shared those numbers with us?
You're looking
Are
at
people
about
buying enough
That's what I'm saying.
electric vehicles?
If you're looking at about 5,000 cars a month, you're looking at about 60,000, and this graph is only growing. So, you've got to compound it over time. But even at a simple calculation, multiplication base, if you're looking at about 1 lakh odd cars to be sold, electric cars to be sold in a year. Last year it was, I think, about 60 to 70,000 cars. If you're looking at about 1 lakh odd cars to be sold, then 10% of that is only 10,000 cars. And if 10,000 cars are Tesla, and Tesla is given the mandate to import up to 12,000 cars, with Tesla coming in, the pie is only going to expand. There are going to be more options available at a price point which is vacant right now. So you could actually see the market only grow. The ambition and the aspiration of owning a Tesla EV versus a Kia EV versus a Hyundai EV, which are coming in almost the same price bracket, plus minus 5 lakh rupees, is going to be pretty much a no-brainer. So I believe with Tesla coming in, the whole pie is going to expand.
Absolutely, the pie is going to expand, and those looking to buy an electric vehicle, specifically a Tesla car, may not have to wait for very long. But we do know that there are some hard bargains, tough negotiations that are currently at play between Tesla authorities as well as Government of India. But before we close this bulletin, an important story that has come by the way of personal data breach at Taj Hotels. We're given to understand that 1.5 million people and their personal data was exposed. In fact, Taj Group, Tata-owned Taj Group, has also been told to pay up to $5,000 if they want to get that data back. So, I mean, it's a serious concern.
It's a serious concern, but honestly, perhaps it's not as serious as other, data breaches that reportedly have surfaced in the past. Of course, India's entire Aadhaar UIDAI system being hacked, and Aadhaar
reports
information of, reportedly, and reports of the entire population base and Aadhaar, which is, I think, at a 1.4 billion population size, we have in excess of 1 billion Aadhaar numbers already issued. So I think in comparison to that, 1.5 million seems like a small number. It's still serious. Okay. I'm not saying it's it's something worth ignoring. It's still serious.
And likely then again, to be high net worth individuals.
Absolutely,
because customers of Taj
very
Hotel.
True, very true. And then the other example, of course, is what we saw with Apple more recently. And data breach, or a bid to breach into or hack into phone numbers, into mobile phones of some fairly influential people in the country, was again a very, very serious data threat, data security issue. So in comparison to that, I believe this may not be as big a deal, but yeah, it's still very serious, because you're talking about 1.5 million, 15 lakh odd high net worth individuals who've stayed perhaps at Taj properties between 2014 and 2019. I think that is the range, 5 years of of data crunching, which a hacker by the name of DNA Cookies is willing to sell on the dark web for as little as $5,000 And what all does this data entail? It includes names, it includes phone numbers, addresses, membership numbers of perhaps the Taj inner circle, and in addition to that, other personal identifiable information. Now, what could that mean? I believe that could mean all the documents that you use to check into a Taj property, which could be your passport, which could be your Aadhaar, which could be your driver license, which could be your voter ID. So any sort of documentation that you present when you're checking into a Taj property or into any five-star hotel or or any hotel of repute for that matter, that is the kind of information which is available on sale for as little as $5,000, and a sample of that has already been released. About 1,000 odd entries have been released by the hacker DNA Cookies already on the dark web, asking the Taj group of hotels to verify and identify and confirm that yes, data has been breached already. Now, the Taj group is saying that it has been made aware of this development. However, it is also saying that it takes data security very seriously, and is going to investigate this case. And India's sort of official regulator, or the official cyber security regulator, INCERT, has also been made aware of this breach. But yeah, I think we'll have to wait for more details to come out.
All right. So what we do know so far, 1.5 million customers who've stayed at Taj Hotels anywhere in the country in the last 10 years, that data is out in public, as in it has been breached, and the person responsible for it, the hacker, is asking for $5,000, approximately 4 lakh rupees, and is ready to sell it to anyone who makes that money available. Taj Group is saying they are investigating the matter and they take such a breach very, very seriously. But with that, it's a wrap on this show. Thank you for watching.
Hamas attacks Israel.